The financial press exposes the truth about the job market. Hey everyone, it's Wolfgang. So you probably will not hear this on Bloomberg. Bloomberg has been carrying water for the party line about interest rates, about the Fed actions for a long time. Bloomberg is not the source of this. This was an article on Yahoo, yahoo.com. Came clean. The financial press, Yahoo in particular, came clean and told the truth about the job market today. So I'm going to explain what I mean, what they reported. So the first thing is jobs for our fellow citizens. That's the most important issue. Stability in U.S. society comes from everyone having employment and an ability to feed themselves. Wealthy people obviously don't need to work. Most people need to work, need a job. So this was from the Yahoo article today. Continuing jobless claims are at the highest level in 4 years, almost 4 years, since November of 2021. So I saw that and I thought, wow, someone in the financial news media is telling the truth about the job market. Pretty novel these days. Again, Bloomberg will not report this. They may be forced to report it now because someone else in the, because normally Yahoo also touts the party line. They don't deviate from the party line. So the other thing they reported, initial jobless claims are at an 8-month high. New claims for unemployment insurance are at an 8-month high. And all these continuing jobless claims, that's people who have been unemployed for a while. It's the highest in 4 years. So right now, the biggest problem with interest rates, the reason the jobless numbers are so high and getting worse is interest rates are too high. A lot of these jobs come from the housing market if it was healthy, but it's not healthy. The housing market is, I say, deceased. It's like dead. The housing market is not in good shape. There are 500,000 more homes for sale right now in the U.S. than there are buyers to buy them. And a big reason for why there are so many homes that are not being bought is a lot of people cannot qualify for a mortgage because of the high interest rates. And it's a real sham that interest rates have been kept this high this long. And towards the end of this, I will explain how it has come to pass, how it happened. And it's not too cool either, how it's come to pass. Not too cool. It's nothing to be proud of by the people who perpetrated this. These unusually tight monetary policy for too long. High interest rates is also known as tight monetary policy because it reduces economic activity in the U.S. when interest rates are too high. When interest rates are high, credit card interest goes up, home loans go up, car loans go up, and as those go up, fewer people can afford to buy a car, a home, or to use credit cards. And I already reported a couple days ago on the record number of seriously delinquent credit card accounts. Very high number of people who are more than 90 days late making credit card payments for the same reason. Excessively tight monetary policy. Tight monetary policy means interest rates are being kept high on purpose. And right now, there is no legitimate reason they should be this high. And I'm going to explain why towards the end of this, okay? So first of all, though, I want to talk about, I said that the jobless claims that were reported by Yahoo today, I said that a lot of those jobs are not being created because of the dead housing market. Okay, so I want to talk about what jobs are not being created. What jobs get created with a healthy housing market? If interest rates were lower and more people were buying homes and we didn't have so many homes for sale that people can't buy, if the housing market was healthy, what kind of jobs would be created? Flooring sellers, flooring installers, furniture sellers, sellers of appliances, installers of appliances, sellers of lighting, installers of lighting. A lot of this is the goods themselves, the flooring, the furniture, the appliances, and then the labor, the skilled labor required to install them. Lighting, roofing, painters, remodelers, landscaping, and others are not being hired, not being bought. There's a lot of furniture not being bought, a lot of flooring, a lot of appliances not being bought because the housing market is in bad shape. Okay? So before I get to the punchline here, I want to make sure I didn't... a lot of tradespeople have been out of work due to the deceased housing market. I mentioned that. So there right now there's a huge pent up supply of consumption. And it might sound strange to have a supply of consumption, but what I mean by that is all these people who have been out of work for a while, and the people who just filed new unemployment insurance claims. These people, if they felt prosperous, they would be buying homes, they'd be buying cars, they'd be using their credit cards. So consumption, people buying things, people having things installed, consumption leads to prosperity, okay? And the reason is when people are spending money on these things, the goods and the labor to install them, the people on the receiving end of that money, the flooring sellers, the furniture sellers, the appliance sellers, and all the skilled labor that installs those, when those people receive the payments, they go out and spend money in the economy too. And so it keeps adding to the health of the economy. It keeps improving the health of the economy. So that's why consumption, buying stuff and hiring labor, consumption leads to prosperity. So right now, all these people who are not working do not feel prosperous, so they're not spending. And that's hurting the economy. It's not just the people who cannot afford to buy a home or a car. It's the people who have lower paying jobs who are not buying stuff that they could otherwise afford. Vacations, camping vacations, things that they could afford, clothing, affordable stuff on the, goods and services on the affordable side of the spectrum in our economy are not being purchased. Consumption leads to prosperity. Right now, we do not have prosperity. And so the truth about Jerome Powell's claim, this is the awful thing that's going on right now. So let me explain. Cost push inflation is the sore point. Jerome Powell is claiming that he's keeping interest rates high to fight inflation due to tariff-caused price increases. In other words, Jerome Powell has come out and said tariffs are going to increase prices, and so that will cause inflation. That's called cost push inflation. So we're going to keep interest rates high because of that. We're going to fight inflation by keeping interest rates high. Here's the problem. Interest rate policy does not affect cost push inflation. There are two kinds of inflation. There is demand pull inflation. That's the kind that we all know about. It's when there's too many people spending too much money on too few goods that drives up the cost of those goods. It's like anything else. If there's a great concert in town by someone who's very popular, there's a limited number of tickets. Those ticket prices go up because there's so many more people who want to buy the ticket than will fit in the concert hall or arena. So the price of the tickets goes up. Scalpers can charge a premium over the actual ticket price because too many people are chasing too few tickets. The same thing happens in the entire economy. That's called demand pull inflation. Too many people are demanding a limited number of things, and the price of those things goes up. Concert tickets for a very popular recording star, for example. If you've ever tried to buy good seats at a concert for a very popular recording star, you know exactly what I'm talking about. Scalpers go in and buy tons of tickets, then they mark up the prices 1,000%, and they sell them because there are too many people chasing too few tickets. They can get away with driving up the prices. So interest rates can fix demand pull inflation, okay? And the way that works is if there are too many people buying cars, if there are too many people buying houses, if there are too many people using the credit cards to buy discretionary things, all the Federal Reserve does is raise interest rates. Credit card interest rates go up, car loan interest rates go up, home loan interest rates go up. And then the number of people trying to buy those limited things declines, drops. Fewer people are now buying things, so the prices stop rising. So not long after the COVID crisis in 2020, we all know what happened with the prices of things, inflation. That was demand pull inflation. It was not cost push inflation. Powell is claiming to keep interest rates high to fight this type of inflation. He used interest rate policy starting in October of 2022 He raised interest rates dramatically and very quickly, starting in October of 22, not to fight cost push inflation, but to fight demand pull inflation. There were too many people spending too much money on too few goods, especially when the supply chains were disrupted because of COVID. There were so many more, the number of things for sale dropped, and everyone was flush with cash because the government was giving people money, that the prices of those limited number of goods that could get through the broken supply chains, those prices skyrocketed. We all experienced the high inflation, the cost, the price increases during those times, during the COVID years. Powell started raising interest rates in October 2022 to fight that. And it worked, because it always works. Raising interest rates can successfully fight demand pull inflation and stop it almost all the time, right? So, but raising interest rates cannot battle cost push inflation. So what is cost push inflation? Cost push inflation, it starts this way. The tariffs reduce a company's profit margin because the company has to pay the tariffs to import things into the U.S. So companies are paying these tariffs, and what they would prefer doing is they don't want that to cut into their profit margin, so they will raise prices on the things they sell to pass on the cost of the tariff to their customers. That's called cost push inflation. The cost of the things the company buys and imports went up, so they push higher prices onto consumers. Cost push inflation. Okay, so increasing interest rates does not fix this problem. Does not. And that is the travesty, that is the lie that Jerome Powell has been telling the public for months, that he can somehow affect cost push inflation using interest rates. You can't. And if you have an economics background, you know that to be true. The reason Powell gets away with this lie is because the vast majority of U.S. citizens don't know there's two types of inflation. They know about demand pull inflation, right, that we experienced during COVID years. They don't know about cost push inflation because tariffs are not used very often. And I find it hard to believe that Jerome Powell does not know the difference between cost push inflation caused by tariffs and demand pull inflation that he successfully fought starting in October 22. I think he knows the difference. And so I'm really unhappy with that behavior. I don't trust that behavior. I have lost faith in that leadership. The people around him should be putting more pressure on him to come clean with the U.S. public and say, you know what? The Federal Reserve cannot use interest rates to stop companies from raising prices, pushing tariffs onto the public. The Federal Reserve cannot control that. Okay? So here's the dirty little secret, the other part of that he's not telling you. The act of the company raising prices eliminates the inflation because people will not buy the goods with higher prices. So when companies try to make their customers pay the tariffs, they want to protect their profit margins, so they try to raise prices to push the tariffs onto customers. Customers stop buying, and it solves the problem. It's self-solving. This cost push inflation does not need interest rates to fix it. It fixes itself. When companies try to protect their profit margin by pushing the increased price caused by the tariffs onto customers, many customers will just not buy. They will stop buying, and that will force companies to lower prices again. Companies will say, okay, we raised prices, we angered a lot of our customers, the number of units we're selling has dropped significantly, we want our business to survive, therefore we're going to have to lower our prices back to where they were. So cost push inflation is self-healing, and interest rates will not affect it. Interest rates will not affect a company, will not change a company's mind about trying to push tariff price increases to customers. Will not help. And he probably knows that. I think he probably knows that. So, and that's part of the reason why a lot of the financial press will not come clean about this issue. They are towing the party line with the Jerome Powell regime, the people behind him who are failing to put pressure on him to come clean and tell the truth to the American people. He should come out and say, look, the Federal Reserve cannot solve cost push inflation being caused by tariffs. It solves itself. He should come clean and say, what companies are going to do, American public, they're going to try to raise prices on you, and you will stop buying as many items, and then companies will lower their prices. So I, at the Fed, do not have to raise interest rates for that because the problem will solve itself. If he was being forthright, that's what he would say. So that's where we are with the financial press. At least we've got Yahoo coming clean and saying that the continuing jobless claims are the highest in 4 years, and the initial jobless claims are at an 8-month high. Finally, people might start putting pressure on people to come clean to the American people and tell the truth. If one of these people, because normally Yahoo just toes the party line and backs up whatever the Jerome Powell regime has been doing for a long time. But today they came clean. They reported the actual facts of the matter. And there's too many people, our fellow citizens, who are not working, who should have jobs. They need to lower interest rates. They should do it sooner rather than later. This is not a political thing. This is the health of the U.S. economy. And most importantly, at least to me, is knowing that people who want jobs and can't get them right now are finally able to go back to work and have an income to support themselves, to support their family. That's sort of the humane thing to do for the American public. It's the most humane thing to do, is to provide jobs for people so they can feed themselves and take care of their families. And one way to help in that regard is to lower interest rates. I already explained why Powell is wrong about keeping interest rates high for cost push inflation. I hope that helps you guys understand this a little better, because people are not talking about this, and they should. If you dig around, you might find a source or two that's actually trying to explain the different types of inflation, the two different types. So if you have any questions about this, please post questions in the comments, and I'd be happy to answer any questions. I apologize if I sound a little passionate about this, but I don't like people being out of work who would prefer working and being able to provide for themselves and their family. That's the most important thing to me. That's why I'm a little bit passionate about it. So, but thank you all for watching, and have a great day.